Good afternoon. Time to check in on your markets now. Chinese equities came under pressure after Beijing shut parks, shopping malls and museums, while more cities resumed mass testing for COVID-19 as cases spiked, which has fueled concerns about the hit to the world's second largest economy. Locally, value retail group Pepco reported a more than 20% rise in headline earnings per share, despite floods in KwaZulu-Natal and the riots of July 2021 having weighed on its revenue growth. The retailer, which owns Pep and Ackerman stores, expects that 37 stores will only be opened again in its next financial year. Meanwhile, Coronation Fund managers reported lackluster results due to the turmoil in the financial markets this year. Coronation's results mirror a similar experience of larger rival 91, which last week reported half-year results showing a sharp drop in earnings as well as a decline in assets under management. But to give us perspective from a global side of things, we are joined by Han Tan, who is the Chief Market Strategist at Xfinity. Han, thank you so much for your time. I mean, let's look at general market sentiment. Do you get a sense that, I suppose, even though the best is yet to come, the worst is behind us?
Well, at least in terms of stock markets, I think the worst is behind us. But again, that's based on this key assumption that most of the Fed rate hikes are also behind us, right? But then looking ahead, I don't think this implies that there's a speedy return to those all-time highs that we saw at the onset of this year, because keep in mind, we are still seeing a looming risk of a global recession by next year, and that if it happens, that could suppress earnings for a while longer. So I think overall, again, to be clear, possibly the worst behind us, but potentially a long road ahead to erasing 2022's losses for stock markets.
The oil price is a commodity we haven't spoken about in a while, and you have Saudi Arabia saying that OPEC Plus is going to be sticking with the current measures, which, dealing with oil output cuts and others in order to find that balance in the market. I mean, how much of the Russia invasion of Ukraine has been a game changer here when we look at the oil price, especially since March?
Yeah, I think it's been a game changer in many aspects, right? Not just OPEC or the stance by OPEC Plus from supply hikes now to production cuts. I think this conflict has also fed into the global inflation story, has contributed to a food crisis, and even to the point of redrawing some of these geopolitical allies or the ties between these geopolitical allies. I think overall, it contributed to a testing year, to say the least, but those risks are not contained to just the oil price story.
Last week, you and I were talking about, the performance of the dollar, at least since the beginning of the fourth quarter. And then you have Goldman Sachs talking about, peak dollars probably like quarters away. Do you agree with that peak dollar is quarters away? And what would we need to see happening globally in order for you to be convinced that that is the case?
Right. I'd rather use this terminology. I'd rather go with the dollar being supported for a couple more quarters, more so than saying that there is a new peak still ahead for the dollar, right? I wouldn't have to look too far around the world. I just have to focus mainly on the Fed, which has been a driver for this stunning rally for the dollar for much of this year, although it has, to be fair, pulled back quite substantially, over the past month or so. So again, I think that's very much down to the U.S. inflation data. If the inflation data continues moderating, as we have seen over the past couple of months, that suggests that the peak for U.S. interest rates is closer at hand, and then that could imply that the pivot is closer. All that said, that could lead to some unwinding of the U.S. dollar strength. But I think, to be clear, depending on how long the Fed keeps those interest rates at that peak, I think in that interim, we do expect the U.S. dollar to remain supported during that period.
Last week, we started off with Fed comments from Lael Brainard, and then over the weekend, it was Raphael Bostic. How much are investors hanging on every Fed member's comments? And do you get a sense that they're trading on those pronouncements, or it's just too soon yet?
To be fair, they are, but those intraday moves aren't much. So, for example, right now, even as we speak, we see the dollar easing while gold prices, catching a breather. For example, that's on the back of some dovish comments that we've been hearing, right? But I think overall, I think the massive or the bigger catalysts would still be data dependent. So I'm talking about the non-farm payrolls report as a jobs report or the U.S. inflation data. We've got a couple of those due before the next Fed meeting by mid-December. So I think it's those three events: inflation, jobs report, and what the Fed actually does and says at its policy meetings. I think those events hold the larger potential for those bigger moves in markets.
And I was going to ask you, how important are those figures before that last meeting? And perhaps let's hone in then on the jobs number. How important is it?
Yeah, and of course, it's very important, perhaps only a close second to the U.S. inflation data, because we all know that inflation has been enemy number one for the Fed. And they have said they are willing to tolerate economic pain in order to reach its goal of that 2% inflation target. But, having said that, U.S. hiring has been relatively resilient, although importantly, cracks are starting to appear in the jobs market. So, for example, the unemployment rate has been ticking higher, at least in the last data that we saw. So, if we see more signs of this demand destruction, which is what the Fed wants with its rate hikes, that again suggests that the Fed is then closer to being done with its rate hikes, and perhaps the peak is closer as well. And if that narrative takes stronger foothold in the markets, we could see more dollar unwinding ahead.
Han, let's leave it there. Thank you so much for your time. That is Han Tan, who is from Xfinity, giving us his perspective on the market. So tomorrow we've got those FOMC minutes. But on Thursday, we have U.S. markets that are closed for Thanksgiving. Nonetheless, we will unpack those FOMC minutes for you on Thursday afternoon. That is it from me. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.